With median home prices in San Jose over 1.6 million and still climbing, the question on everyone's mind is it too late to buy a home in San Jose? Today, we're breaking down everything you need to know about the San Jose housing crisis and answering these key questions. Is the San Jose market worse than we think? Will you ever be able to afford a home here? And is the housing crisis going to stay the same, get worse, or actually improve? Hi, I'm Theresa Wellman, and after helping hundreds of families buy and sell in the San Jose market over the past decade, I've seen firsthand how the housing crisis has evolved. Whether you're a first-time buyer, a long-time resident, or just wondering if homeownership in San Jose is even possible, today's video will break it all down for you. Let's start with just how bad the housing crisis really is. What does it mean when we say San Jose has a housing crisis? The simple answer is San Jose is short on homes to buy, which means there are more qualified buyers than homes available for sale. Putting this in simple economic terms, there's more demand than supply, and therefore strong price appreciation. So how does that compare to the rest of California? Well, the rest of California does not have such a high concentration of employed, ready-to-buy households, so California as a whole does not have an extreme supply and demand imbalance like San Jose does. So you might ask, what has been the biggest causes of this housing crisis? First, it's very limited new building over the last couple decades, which has not kept up with the pace of standard household formations that are expected. Second, with young adults in their mid-20s to early 40s typically settling down to buy a home, that age range now is the millennial generation, which is a much larger than recent generations. So not only did we need to build more houses just to keep up with the standard household growth, but we needed even more housing due to the size of the current age groups that typically buy a home. So this is a nationwide problem that is extremely acute here in San Jose for a couple reasons. First, San Jose is landlocked by mountain ranges on the north and south and the San Francisco Bay on the west. So not much space to build. Second, you add the increase in jobs to the area due to the international growth of tech companies here in Silicon Valley, and those have not only brought more people, but also top-level tech talent to the area. Now, these people moving here are top-paid experts in their field who can afford the high prices caused by the extremely low supply and strong demand. Now, why is San Jose market different from other expensive cities like LA or San Francisco? San Jose is different than LA or San Francisco purely due to the concentration of tech jobs, as well as the space available. Most properties in San Jose have yards or more suburban style living, which is more attractive to households with growing families. San Francisco, you're going to see high-rises, condos, and apartments. Not so much properties with yards. Now, what are the biggest struggles for home buyers and renters in San Jose today? San Jose home buyers and renters struggle to compete with limited options at top prices. Home prices are rising faster than wages. The median home price in San Jose is $1.6 million, while the median household income is only $158,000. That's a gap that continues to grow, and we're going to break down the numbers to put that into perspective for you. Mortgage payments are extremely high. A 20% down payment on a median-priced home is over $300,000, and a monthly mortgage payments are around $800,000 at today's interest rates, which does not include home insurance and property tax. And renting is just as expensive. The average one-bedroom apartment in San Jose is $2,900, making it one of the top 5 most expensive rental markets in the US. So what impact does mortgage rates have on this affordability? Well, amazingly, with the increase in interest rates in 2022, which still apply today in the 6% range, the market found a new price balance and then continued to appreciate again, purely based on too low of a supply for the current demand of top-paid tech professionals. So yes, from under 3% interest rate up to 6% interest rate, we saw an adjustment in prices, as you can see on the chart here, for San Jose single-family home prices. But also you can see is that trajectory once rebalanced completely took off again and adjusted to the new interest rates and a new normal rhythm of house price values. But homeownership rates are dropping because only 38% of San Jose residents own a home, and that's the lowest of any major California city. And many people are leaving, with over 40,000 residents who've left San Jose in 2023, and many citing unaffordable housing as the main reason for their move. So who can actually afford a home in San Jose? Well, let's talk about how much money you actually need to afford a home here. Again, referencing numbers from above, if you buy the $1.6 million priced home, you need $320,000 for your 20% down payment, plus an additional $15,000 in loan and closing costs, so $335,000. And that doesn't include the reserves that the bank requires you to have to protect the investment if you were to lose your job. But let's just skip that for now. And let's say that then to afford the $8,000 mortgage payment plus $1,900 a month in insurance and property taxes, you're talking $10,000 a month to own a median home. Yes. So meaning a household here has to make a minimum of $300,000 to afford this median home without any other debt like a car payment or student loan. Of course, those are going to change your debt to income ratio and require even more income to afford it. So to afford a home in San Jose without being house poor, without any other payments, a more realistic household needs to make $373,000 a year to buy the median home. What kind of jobs actually allow people to do that and buy in this market? Well, let's put this into perspective. So we're talking household income here, right? So if one spouse or one person in the household makes $150,000 and another makes $225,000, that will total $375,000 a year, which means together that household can afford a median house. Now, jobs that pay that would be a senior software engineer, a manager, a top-level project manager, and of course, executives will be able to afford that as well. And tech workers dominate the market here in San Jose, with 75% of home purchases in San Jose made by households working in tech. Now, what percentage of home buyers in San Jose are using cash to buy or getting financial help from family? Well, there's varying reports on the percentage of cash buyers, but typically I see most cash buyers in the $3 million or higher price point. Lower price points are typically 20 to 50% down payment to make the monthly payments more realistic with their income. Now, where are they getting these huge down payments? Well, obviously a household earning $150,000 a year would need 15 years or more to save up for that down payment. And they're just going to really struggle because today's prices are just increasing. And in that time, they're going to need to save even more money. It just is a process that seems to never end. And this is part of the crisis, obviously. You just can't catch up. Down payments typically are coming from cashing out stock options or vested RSUs or gifts from parents and family so that buyers can jump in and get into the market. Now, are there any neighborhoods left that first-time home buyers or those not making tech salaries can afford? Yes, there's obviously neighborhoods under the median price that you can check out. I just did a recent video where I rate San Jose neighborhoods and mention price points for each area so you can get a general idea and feel. Also, many younger households buy a townhome or condo just to get started where the median price is under $800,000. Now, again, that's not affordable, but it's much better than $1.6 million. Another thing I hear and discussed or asked about a lot is San Jose housing market a bubble, or I'm gonna wait till prices fall? Well, let's talk about that. Let's keep in mind what we've discussed earlier, that our market is fueled by supply and demand being completely out of balance. As long as supply remains very low, typically around 1 month of inventory or under 1,500 units for sale, then prices will keep rising. Look at the Santa Clara County chart from 2002 today. You note that the yellow line is homes available for sale or the amount of inventory available. This line is extremely low today compared to 20 years of history, and even compared to pre-pandemic, where you can see a shift down in the overall inventory that comes to market every year. The fact is that San Jose real estate rarely crashes. Even in 2008, when inventory peaked at over 7,000 homes for sale, home prices in San Jose bounced back fairly quickly, much quicker than the national response. In 6 years, prices here had fully recovered, proving it's one of the strongest real estate markets in the country. So what's keeping home prices high despite the rising interest rates? Again, supply is extremely low. There are typically only 1,000 homes for sale at a time in the greater San Jose area, far below the demand. Today, in all of Santa Clara County, there's under 700 single-family homes and 500 condos and townhomes for sale, totaling 1,200 units for well over 2 million people. Yeah, pretty wild. So are tech layoffs affecting the home values, or is demand still strong? Well, again, demand is still outweighing the supply, and unemployment, to put it in perspective, is less than 4%. Despite tech layoffs that we saw in 2023, which did increase unemployment from 2.5% to 4.5%, home prices in San Jose have remained stable due to this low inventory. The fact is, local homeowners are holding on to their homes, with over 90% of homeowners in San Jose having mortgage rates under 5%, making them less likely to sell. Plus, the baby boomers are another huge generation that is holding on to their property, making housing supply tight. The data tells the truth. Homes in San Jose appreciate fast. A median home purchased for $700,000 in 2013 is now worth over $1.6 million, proving long-term investment value. Working with clients who have owned homes in the area for 30 or 40 years plus, the math always blows my mind, but it seems to follow the simple rule that values double every 10 years. And I know that's hard to believe, but historical data proves this. So will the crisis get better, stay the same, or get worse? Well, remember, home prices are really dictated by supply and demand. And as long as the local economy continues strong, there will be demand. Supply is a long-term issue that will take years to resolve. San Jose needs 30,000 or more homes, and the city just isn't building that fast to meet that demand. There are some new developments, but nothing near the numbers needed. Zoning laws keep prices high, with 75% of residential land zoned as single-family homes, limiting high-density development. And although SB 9 was passed to allow more ADUs to create multi-generational living or more rental units, San Jose has approved just 2,000 accessory dwelling units to create those additional rental options. But obviously, it's a slow process, and it's not enough to catch up to what we see as far as demand. A client of mine, Mike, has been working on getting an ADU on his property, and from start to finish, it will take over 2 years due to the design and permitting phases. So the city sure can improve this. At current rate, this will just not make much of a dent in the growing demand. So how might the market change in the next 5 to 10 years? Well, ADUs are on the rise, developers are building, and there's more multi-high-rise housing projects in the works that are expected to add inventory. Maybe we'll notice a little bit of relief by 2028. But baby boomers are still holding onto their properties, and will they start to release them? It's hard to say. They are in the 60 to 80 year range now, and some of those on the older side will likely start to release their inventory. But will it flood the market all at once? Very unlikely. So the final verdict, is it too late to buy in San Jose? Well, if you're looking to buy in San Jose, here's my advice. Buy where you can afford today. A home is necessary for your comfort and living, and rental payments are just blowing away. So put your money into a property that you own, because it's not just a roof over your head, it's also an investment. San Jose real estate outperforms stocks, with home values in San Jose having grown 400% in 30 years. So if you're a first-time home buyer, consider a step that you can get in, like a condo or a fixer-upper or a location that works for you, but maybe isn't going to work for you long-term. Condos are a more affordable option, and the median home price we said is $1.6 million plus, but condos start around $700,000 to $900,000. Now, are there creative strategies to afford homeownership in this market? One thing I see home buyers doing is co-purchasing. People are teaming up with friends or family to afford homes to increase that household income. For example, siblings buy together, or parents buy with their kids to have multi-generational living under one roof. You might also consider moving a bit further out, where some buyers are moving to Morgan Hill or Gilroy, which offer homes cheaper than the San Jose area. So what's the best way to build long-term wealth in San Jose real estate? Single-family homes appreciate faster due to the land associated with the ownership. Now remember, land is a precious and rare commodity here in the San Jose area, unlike many other areas or cities, because our natural terrain limits building out even further. Land is more than half of the property value, And in my personal house is assessed as 1/3 the value as the house, with the remaining 2/3 for the land. So as land continues to get more and more rare and more of a commodity because they're building high rise and less properties with land associated, then those value of properties with land will continue to appreciate even more. So yes, San Jose housing crisis is real, but is it as bad as it seems? Well, if you want to make homeownership a reality for you this year or in the future, get the conversation started by reaching out to me. My number is on the screen, and let me know your thoughts in the comments. For example, do you think homeownership is still possible here? Or is it time to look elsewhere and move out of the area? I'd love to hear your comments. If you're serious about buying a home and want to know where to move and what place to avoid, then check out this video where I cover all the worst and best places to live in San Jose. See you on the next video.